AI bulls saw a pullback when the world was fully introduced to artificial intelligence upstart DeepSeek, and our next guest believes it may have started a rotation within the sector. For more, let's welcome in Ellen Hazen, FL Putnam Investment Management Chief Market Strategist and Portfolio Manager. So Ellen, let's start there. You believe we're in this rotation away from hardware vendors towards software vendors. What are the implications of that at this stage of the AI trade?
That's a great question, and that's exactly what we're seeing. We've all seen the DeepSeek news that came out a few weeks ago at this point, where it looks as though the cost of using AI is much lower than what we thought just a month or two ago. What does that mean? Well, it means that the companies that are deploying AI are going to be able to build models much more cheaply. They're going to be able to roll this out to their customer base much more cheaply. The whole question about, oh, well, are you ever going to get an ROI on this model? Well, that's an easier question to answer if the cost of building the model is much lower. So just as we saw with the internet rollout back in the late 90s, early 2000s, initially the play was hardware. Remember JDS Uniphase, Cisco, and so forth. But then what happened afterward? It was the companies that were using that as a platform, the companies that built on top of that and offered products directly to other businesses and consumers that ended up being the real winners there. Companies like Facebook, companies like Amazon. And you're going to see the same thing here. So you're going to see the software companies and the hyperscalers accrue more of the AI value than we thought a month or two ago before we realized that the cost of AI was coming down so quickly.
You know, it's interesting because the defenders of some of those hardware companies will say, well, if it's cheaper, that means they could do more volume, right? They can just sell more of the stuff if it's at a lower cost. I'm curious what you think about that take.
I think we all learned in Economics 101 that the demand curve is downward sloping, and the more expensive something is, the lower demand is, and so forth. Or I guess this the other way around. And so therefore, it is true that if something is cheaper, you are going to use more of it, right? No question. The question is, if it is 20% cheaper, are you going to use 20% more, right? If it's half as cheap or half the cost, are you going to use twice as much? And we don't know what that elasticity of demand is going to be. I do think when you have a dramatic price decline, what you're likely to see is definitely an increase in uptake, but more volatility. And so it's not going to be clear for a while whether or not the increased uptake is large enough to offset the fact that it's going to be cheaper per. I don't think it's necessarily a straight line, but I do think that we have proven, think about it, right? With things like memory, the amount of memory on your phone, the CPU power on your phone, the amount of storage for your camera, and so forth. Every time we get cheaper storage or cheaper CPU cycles or cheaper capability, we find a way to use it. So I don't think that's a question. I think it's just a question of timing. How quickly will that happen? And will there be an air pocket in the middle somewhere?
Analysts are generally optimistic about the AI chip maker's stock, and Nvidia is scheduled to release its fourth quarter earnings after the market closes on Wednesday. Out of the 18 analysts that watch the stock through Visible Alpha, all but one have given it a buy or comparable recommendation. One analyst has even given it a hold rating. A 26% increase over Friday's intraday price would be implied by their consensus price target of nearly $175. Analysts at Wedbush and Oppenheimer, who reaffirmed their $175 price targets on Thursday, said that robust demand for the company's cutting-edge processors as big tech companies increase their investments in AI infrastructure might result in another successful quarter. According to forecasts published by Visible Alpha, Nvidia is expected to report record quarterly revenue of $38.32 billion, up 73% year over year. It is anticipated that net income will increase from $12.84 billion to $21.08 billion. Analysts at UBS, who kept their price target at $185, pointed out that investor expectations having crept up a bit recently, and that more supply chain enhancements might result in increased sales of Nvidia's Blackwell line. UBS increased its estimate of Blackwell's contribution to fourth quarter revenue from $5 billion to $9 billion, almost double its initial forecast. As competition forces Nvidia's American clients to increase their efforts in the AI race rather than retreat, Oppenheimer also suggested that the quick ascent of the Chinese AI firm DeepSeek may ultimately prove positive for the chipmaker. Nvidia shares have increased by around 3/4 of their worth over the last 12 months, reaching $139.11 in intraday trading Friday, despite a DeepSeek-driven decline last month due to worries over big tech's AI expenditures. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Let's bring in senior markets correspondent Kevin Green is here. Good to see you, Kevin. Look, we've had a lot going on. I talked about some of the record closes. We've had gold at records. What are you watching this morning?
Yeah, Nicole, we are seeing a little bit of weakness when you're kind of looking at the sectors. Right before we kind of started here, only one sector is up at this point in time. And when you're looking at market breadth, it's pretty light. You only have around 26% of the stocks in the green here today. But once again, we've had really nice sessions as far as trying to close higher and making new all-time highs here. Now, this sell-off that we are seeing right now, a brief little sell-off here, what you're kind of looking for is kind of seeing maybe some buyers trying to step in at around 61.25 or so. And if you're looking at the longer time frame, Nicole, I mean, 6,200 on the S&P 500 is in the crosshairs. I think you probably will see a little bit of pressure at the 61.75 level just because of some structural positioning there. But we are trying to break out. And if we do have any type of failure here, I have a trend line to in orange that really just connects the intraday lows that we've seen pretty much throughout this whole pullback here, where we could actually see some buyers kind of stepping in. And that really aligns with around that 60-ish area. So that would not be a bad thing, even if we are maybe seeing some intraday weakness. For today alone here, what am I looking for to the upside? 61.50 is going to be your first area of major resistance in the market, and then going higher, 61.75. Once again, that's going to be a key area of resistance here just because of that JP Morgan collar that's kind of sitting there, that short call position. Any type of breakdown, 6100, and that really aligns with that 200 period moving average for the 15-minute chart, which has been very key for intraday traders here to be mindful of, which once again kind of aligns with around that 6100, 6090 level. So overall, we're looking pretty good. Weakness to start off is not a bad thing. We have seen a little bit of weakness, consolidation for the first hour and a half or so, and then we get bidders to kind of come into the market, and that's where we kind of close at all-time highs. So nothing to be too worried about right now.
KeyBank predicts that Nvidia will surpass fiscal fourth quarter earnings projections, with analysts expecting robust performance in spite of continuous manufacturing difficulties. The business expects fiscal first quarter guidance to increase modestly, somewhat over average projections. Nvidia's GB200 NVL servers continue to have production issues, which restrict shipments due to lower initial yields. By meeting demand with HGX-based B200 servers that rely on x86 head nodes, the company is lessening the impact. Demand for Nvidia's H20 GPUs has increased in China as a result of DeepSeek's expansion and a shortage of Huawei's Ascend AI CPUs. Additionally, Nvidia's cloud service providers' customers are financing inventory at electronic manufacturing firms, allowing the company to record sell-in shipments as revenue. The revelation caused Nvidia's stock to rise 1% in pre-market trading. Nvidia's stock was down 0.7% for the day at $139.10 as of 11:27 a.m. GMT5 on Friday. Ahead of the next results release, KeyBank analyst John Vinh raised the price objective from $180 to $190, reiterating his overweight recommendation on the business. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
So for years, I followed the supercomputer races the same way my friends are following the Knicks and the Lakers, right? I mean, of course, I always cheered whenever a U.S. company would jump out in front. Then I would be really worried and afraid, even angry, if Japan or China took the lead. Lurking now in the backdrop, however, is quantum computing, folks, which could one day make this whole supercomputer race irrelevant. Check this out. This is from IBM. And they talk about the fact that the advantages of quantum physics fully realized would be able to process massively complicated problems of an order of magnitude faster than modern machines. I mean, this is just absolutely amazing. Of course, skeptics of quantum computing point out that there are certain issues we have to worry about, like physics, right? And the laws around the three states of matter. You remember the three states of matter. They're right there on the screen: solids, gases, and liquids. Well, it looks like the laws of matter may have changed. In a breathtaking post yesterday, the CEO of Microsoft celebrating what they call a new state of matter, topo conductors, which now they say will enable a fundamental leap in computing. That's because, and the bottom of this is really the most important part, the qubits created with the conductors are faster, more reliable, and smaller. It actually reminds me of the introduction to one of my favorite TV shows, the 1950s Superman. Take a look. Theoretical physics and author of Quantum Supremacy, Dr. Michio Kaku. Michio, is this the Superman moment we've been waiting for?
This is a game changer. Everything we know about digital computers is going to go out the window in the coming years. Already, the CIA, the Russians, the Chinese, American industry, everyone is looking at this new development. We made a giant step toward creating a quantum computer, which many people thought we would never see. And now we can see it in the laboratory.
You know, of course, you've been at the forefront of this. There's so many quotes I have, but one I want to share with the audience that you made. Quantum computers, in principle, are infinitely more powerful than digital computers that compute zeros and ones, because quantum computers are quantum mechanical, right? And that an atom can be split in any direction. How many directions are there? An infinite number of directions. I mean, it sounds mind-boggling, to be quite honest with you, and hard to get our hands around. How does this look in practice?
In practice, it means that what is sitting on your desktop could be a museum piece. Now, we're not there yet. Microsoft has been able to create a quantum computer with 8 qubits. When we hit maybe 1 million qubits, watch out.
Wow.
At that point, you realize you'll be able to break into any known digital code. Think about that. All the codes that we use to guard our secrets can be broken. Nations have to worry about this. Banks, of course, have to worry about this. But we can also break the code of nature, cancer, heart disease, all the things that are confronting us will be able to crack, because Mother Nature, in some sense, is a quantum computer.
So having said that, guardrails. It sounds like there should be guardrails. Can there be guardrails? And who would be in charge of the guardrails?
Well, already the U.S. government has set up a study group looking at the possibilities of when, not if, but when we have quantum computers, how will we protect our bank accounts, our savings, our nuclear codes? How are we going to protect that? And so already the federal government is in on this. They realize it is coming faster than you realize. So this will not only change the way we live, the way we view disease, the way we view warfare, it'll also change your pocketbook as well.
So I know the countdown has gotten shorter. The timeline has certainly got a lot shorter than just a few months ago. As we wait, 2025 is also said to be the year of humanoid robots. You've written a lot about this. They're coming on strong. How does that fit into the world where, I think it was Isaac Asimov who once said, listen, robots, AI, those kind of things are amazing because they will free people up to use more of their brains. Can it really be that positively impactful to a society that's used to people doing things, actually achieving things with their own hands and their own minds?
Well, I think that science fiction writers have done a great job of scaring the pants off people. Realize that robots that can do mechanical work are still far, far in the distance. Look at the workplace. We don't have robots picking up garbage. We don't have robots designing buildings and creating new structures. No, we have robots that can barely talk and barely see what's happening. So we have a long ways to go before we can mimic Mother Nature to create a human counterpart to us.
Nvidia is expected to release its quarterly financial reports on February 26th after the market closes. Nvidia has only increased by roughly 3.4% in 2025, falling just short of the 4% gain that the S&P 500 has experienced since the year began. Given that the S&P 500 surged more than 23% higher in 2024, while the artificial intelligence, AI superstar surged 171%, it could seem strange to see it in this position. However, what if you broadened your view to include a few years ago? Would you be anticipating a return on your investment if you had purchased Nvidia stock 5 years prior? Or would you still be waiting for it to rebound? Even back in 2020, when it acquired SwiftStack, a data storage company whose technology had already been used in Nvidia's graphics processing units, GPUs, Nvidia was striving to become the industry leader, even though AI stocks have only recently gained traction on the radars of most investors. Over the following years, Nvidia adopted an ambitious growth through acquisition strategy, which resulted in a flurry of mergers. Throughout the last 5 years, Nvidia has demonstrated more than just a stronger portfolio of intellectual property. As consumers continue to purchase GPUs and other semiconductors from Nvidia, the business has also seen improvements on a number of financial measures. Investors have reason to celebrate Nvidia's financial achievements, which range from increasing its top line to producing higher profitability and free cash flow. The market has continuously rewarded Nvidia for its accomplishments over the last 5 years, pushing it up by roughly 1,820%. As I write this, the initial investments of those who bought $1,000 worth of shares 5 years ago have increased to $19,270. Even though Nvidia's stock has performed exceptionally well, investors still have a tremendous chance because it is currently trading below its historical valuation. Although it may seem costly, the current price of shares is 54.8 times trailing earnings, which is less expensive than their 5-year average PE of 73.4. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.